Indonesia's Rupiah was set for the biggest weekly gain of the year, and government bonds advanced after the Federal Reserve unexpectedly maintained stimulus, but then fell to its lowest level in 4.5 years versus the dollar on Monday. Joining me now on the line is Dr. Christophe Sievers, owner of Sievers Development in Switzerland. Dr. Sievers, what were the main causes for this, and do you think there's cause for concern?
Well, I don't think we should be oversensitive. Although an immediate cause for the sudden devaluation was the publication of a $2.3 billion trade deficit for July, which is the largest since the new record-keeping has begun in 2008. The underlying causes are, of course, the trade deficit, the current account deficit, and the fiscal imbalance. Current account deficit and imbalance are over 2%. And this, of course, leads to a pressure on the currency. Further, there is consumer spending, and this is coming under pressure as prices are going up. So, for example, across Jakarta, Starbucks coffee has increased by 9% since early July. And as such, the rupiah then has devalued for more than 13% for the year, which is in fact one of the strongest devaluations. Is there a cause for concern? Yes and no. Yes, in the sense that prices are going up. Car prices, for example, might rise in domestic currency, which of course affects the middle class population's budgets. Then there is a fight against corruption, and there is a government election coming up in the next year or two, which both leads to uncertainty. I equally think there is a no of concern, in the sense that there is a strong population growth, and a lot of young people are joining the workforce. More than 20.5 million young Indonesians between 2010 and 2015, which is the third highest after China and India. Further, there is enough foreign exchange reserve. They can finance imports of more than 6 months. There is a healthy banking system which still earns money and has reasonable interest rates and income. And last but not least, there is investors' confidence. The head of Saratoga Capital, Indonesia's largest private equity fund, remains optimistic and says that nothing has changed in structural terms, so the Indonesian economy should be okay. Now your third question. Does the Fed cut impact the monthly bonds and the monthly bond purchases? Yes or no, and what is the impact? I think the bond purchase issue is an emerging market issue. It's not only an Indonesian issue. So everybody in the emerging markets is concerned. Indonesian bonds have corrected stronger than the currency. This has to do with the fact that U.S. investments became relatively more attractive, leading to an outflow of funds into U.S. bonds, not only devaluing the currency, but also adding pressure on the local bonds. This is largely over now. The currency is, by and large, on purchasing power level to the U.S. dollar, or even soon a little bit undervalued. So bonds which have suffered more than other investments should be relatively okay. However, one has to keep in mind that investment outlooks for emerging markets as well as for global markets are rather dim right now because of the U.S. budget situation. But the emerging markets shouldn't be more affected than the developed markets.
Is there any major steps the government can take to narrow the current account deficit, and how long do you think that this is going to take realistically?
Well, the government is taking a lot of steps already now. They have increased the prices of fuel, for example. They have also started to instill more discipline on the money printing side, on the central banking side, and they bring in a new person into the finance ministry that will be responsible for overall finance and economic steering. Not unlike India, which has brought a new central banker from the World Bank and IMF. So in other words, they have done a lot to improve on structural and government-related measures and issues.
And finally, what are the issues that need to be resolved that are putting pressure on the rupiah, causing it to fluctuate?
Well, it's always the same thing. You have imbalance. There is a lot of consumption. There is more money spent than earned. So there certainly has to be some conservative economic policy aiming at reducing the outflow of money from Indonesia. So consumption will probably go down a little bit. Further, on the mining side, the mining prices may have an impact on the overall economic balance as well. So it would be positive if the mining prices could be increased so that the output of the mining could be sold at a better price. But this is very much depending on world markets and less under the influence of Indonesia. So sound economic and fiscal policies combined with a cautious monetary approach will help the rupiah internationally.
Many thanks for joining me on the line today, and that's all we have time for now, but do check back later for further updates and interviews from the TV team. Bye for now.